Hello, everyone. I'm Norbert Sparrow, editor of Plastics Today, and welcome to this update on the plastics resin markets. I'm joined by Michael Greenberg, founder and CEO of the Plastics Exchange and the Resintel market intelligence platform. Honestly, I can't think of anyone better to offer insights on resin pricing and trends, so let's get started. Michael, I understand that August trading was in the slow lane, as one might expect. How is September shaping up so far?
Well, first of all, thank you, Norbert, for having me. I appreciate the opportunity to share some market intelligence with you and your readership and your following. So thank you very much. August wasn't so good. July, by note, was our strongest volume month since like the freeze of 2021. So, we came off a very strong July, and I anticipated that a lot of the volume that we saw late in July was kind of buying ahead, borrowing August orders. It's as it came out, August was slow. Sentiment was slow. It really started almost like August 1st. The market just got a lot quieter. It seemed like a lot of processors had, like I said, had bought in and bought heavily in July, and were a bit more patient to wait and see what the market did. And sentiment turned softer, July wasn't so hot volume wise, but September, once again, it's like when the calendar flips, sometimes you have a very different market. September, I started to see better action right out of the box, both from processors and resellers, suppliers in general. I think when you're coming off of a slower month, suppliers are generally a little bit more liberal with their pricing and availability as they want to start building or at least building a new month and getting back on track.
Cool. Can you give us a little bit of information on the pricing itself on polyethylene and polypropylene, where we're at these days, either up or
Sure.
down?
We have gone through a period of almost like unprecedented stability in pricing. I like a lot of action. I like the markets up and down and moving, and there's a lot of fundamentals that are pushing the markets, and it creates for a very interesting business and trade. And yes, the market's been very, very flat. Our polyethylene prices were up a few cents early in the year, our spot prices, and market softened and came off, and our net polyethylene prices are down about a penny for the year, with some variance by grade. And we're talking domestic pricing. Export pricing is softer. Polypropylene is down for the year. Polypropylene is highly correlated to the propylene monomer, which has come off sharply. Polypropylene has really changed. We went through a period of very tight, for some years, of very tight monomer supplies. And starting about a year ago, monomer supplies really started to increase, and it got to be adequate and ample, and even past that into abundance. So, but this is what the industry was looking for. The industry built a handful of PDH units to turn propane directly into a propylene monomer. And it works. During some of that transition, as the industry was starting to rely on PGP coming off the PDH, there were some outages, and it created enhanced volatility. But ever since like the last year or so, supplies have become plentiful, to the point that little PDH disruptions that happen, and they are happening, it hasn't had a huge impact on the market. So polypropylene has been extremely, it's flat to down. Other derivative demand outside of polypropylene has been weak, and it's left the market well supplied. And without a big reason for or major supply disruption, polypropylene prices have really just been steady. Going back to polyethylene for a second. The major indices has the market up about 6 cents, 5-6 cents for the year. In polyethylene, we recognize that there were a couple of price increases that happened. January, February, we saw the market go up now 2 to 3 cents for a while. But then we saw some weakness come into the market, and the indices recognized an increase, 3 cent a pound increase in June. Yeah, we were up a penny or two, but not from the high watermark. So the indices are very liberal with price increases. They don't look to really recognize the price decreases when they happen. So yeah, I saw a couple of price increases, but while we recognize price movement, even to the downside, like I said, others don't. So our net price is down about a penny for the year.
Okay, well, good news for processors anyway.
Well, for those processors, good news for processors that are savvy to the market. I mean, if a processor isn't savvy to the market and they're just following the indices and quote unquote contract pricing, they're paying up 5 to 6 cents. But a savvy buyer who's got a pretty good feel for the spot market and knows when it's time to be negotiating their discounts or their unofficial non-market adjustments, they're benefiting from a slightly softer market.
Right. So any thoughts on what might happen the next couple of weeks? Any predictions, or do you think it's going to just continue on its merry way?
Well, we're deep into September. This is like when the hurricane season is the most intense. And so far we've skated through with, it's been a complete non-event. A couple storms that have gone out into the Atlantic, not really causing any harm or not causing any harm whatsoever to the petrochemical producing area of the Gulf. So you had some mild buildup of inventories, mild. But last year was also relatively benign outside of the early July Beryl hurricane that came through. It was relatively, and once processors start getting comfortable with pricing, with availability, it kind of like started soaking a little bit of the premium out of the market. What I see going forward? Look, unless a couple of big storms come in here to change things, the market's kind of it's kind of flat, maybe a little bit soft. We are coming into a better seasonal demand period right now, coming out of the summer doldrums of sorts. Yeah, look, I'm not bullish the market. I don't really see a reason for the market to go up here. Can it slide a little bit? Yeah, it could slide a little bit. At least we could see some softness in spot. The export market is weak. Export pricing is weak. And the polyethylene producers, they rely on the export market for some 48% now of all their sales. And polyethylene producers have a lot of pricing power and pricing control in the domestic market, but they can't set the price worldwide. It floats, and there's been a lot of supply and a lot of pricing pressure that's coming out of the Middle East and from China with all of their huge expansions, and it's keeping a lid and putting pressure on the export market. Now, the polyethylene producers in North America who enjoy an ultimate cost advantage over anybody else worldwide when it comes to polyethylene, they're fighting for their market share. And if Chinese producers and Middle East producers are willing to suffer less, well, the polyethylene producers in North America they're going to go chase those bits. They want to maintain their market share, and they have rebuilt their market share. It's very strong, and they'll do what they can in order to maintain it. But when you've got a big difference between the export price and the domestic price, some of it starts to bleed over. Some supplies somehow make their way back into the domestic market, or at least pricing makes its way into the domestic market. You also would look at between July and August, the producers they added a tremendous. The polyethylene producers added a tremendous amount of inventory to record levels above 8.1 billion pounds, which is a lot. And could they afford it? Sure. The polyethylene producers have been very, very successful over the last bunch of years, and they're extremely well capitalized, and they can afford to hold 8 billion pounds of material. Sure, they can. But as they build all this new capacity, they haven't necessarily built all the new warehouses. The warehouses are very full. Like we saw back in December, January of last year, warehouses were so full that rail cars got backed up. There was really nowhere to put them. It's awfully early in the season. Usually we see some kind of a build up for Q, and the producers really push out polyethylene inventories later in 4Q. But we're also already seeing what I would consider to be too big of a buildup. If they continue to build inventories, we might come into some capacity issues again, which puts pressure on the market, which softens, which could, like I said, lead into the domestic market as the producers feel pressure to move rail cars and move supplies. So
Okay.
I'm not bullish at this point. Let's put it that way. I'm not like terribly bearish, but I don't see the market much reason to go higher.
Right. You mentioned capacity. What about any force majeure events that you're seeing, or that looming supply shortages that you might be on the watch for? Anything to say there?
Well, sure. There's some planned turnarounds, minor. This isn't really the turnaround season. It's generally in the first into the second quarter when the weather is a little bit cooler in Houston. It's not the planned outages that are a problem because producers generally sacrifice some inventories for it. It's the unplanned outages and the sudden disruptions that could cause some chaos in the resin markets and resin pricing. And similar to such a buildup of inventories in propylene monomer, which could help the polypropylene industry sustain any sudden disruptions that could happen. You had such a buildup in polyethylene inventories, polyethylene resin inventories. So even if there was a disruption, unless there's like a number of plants that were ongoing and somewhat sustained, the producers could always shift away some of their intended export sales, which are at a lower price than domestic sales. So if there was a sudden disruption in polyethylene production, sure, would the producers lean on it and try to get some increases out of it? Absolutely. But is there like an imminent shortage that would happen? Probably not. They would just, like I said, shift some supply away from intended export sales to feed the domestic market. So I want to see some action, but I see the market kind of flat.
I hear you. You like to see some action. I love that. Well, to close this out, Michael, why don't you tell us a little bit, especially for viewers who are interested in doing a deeper dive on resin pricing and trends. Tell us a little bit about the Plastics Exchange and the Resintel platform that you started at the beginning of the year.
Cool. Thank you. So Plastics Exchange, we've been around for 25 years. We really set out to create a liquid market for the commodity polyethylene and polypropylene resins. So we have trading relationships with most major and minor broker, trader, resellers, producers in the industry, and we maintain inventory in all commodity grades. So we have daily pricing, daily spot pricing, and availability, and our prices are based upon resin that is available, prime polyethylene. You can pick it up tomorrow, packaged in Houston, ready to ship. There's our pricing, and we evaluate our pricing every day. If there's a reason to change it, we will. But we've accumulated 25 years of daily pricing across 9 different commodity grades of resin. And we also have 20 years of, in Resintel, we've got 20 years of ethylene and propylene and ethane and propane and crude and natural gas. And marry that with all the supply, demand, production, inventory data printed out by the American Chemistry Council, we've got a pretty neat and sophisticated digital platform that charts out supply and demand against pricing, and we look for correlations, we look for signals, and what could trigger pricing movement. And like I said, I don't see a whole lot right now. Market seems pretty flat, but things can change, but maybe not so fast.
And tell us what website to go to get that information.
Great. Well, for anybody's commodity resin needs, yes, the PlasticsExchange.com. We've got very liquid markets for all polyethylene, polypropylene, commodity grade resins. And we also shoot rail cars, direct to customer sidings. We export heavily. And then resintel.com. We put out a daily resin report, pricing up and down the supply chain, and little tidbits of information that's starting to affect market sentiment. And we put out a weekly report. I've personally written more than 1,200 weekly resin reports over the years. All available through Rosenthal. I won't pitch us too hard. We're very cost effective for those seeking more market intelligence. We're cheaper by magnitude of most from everybody else. So sure, the information is available, and it's not just numbers and charts and the fancy charts. We're available easily to benchmark pricing and help others make more intelligent buying and selling and inventory decisions.
Great. Well, thank you again, Michael, for sharing your insights. I do hope we can catch up in a couple of weeks to review what's changed and what hasn't in the resin markets. Hope to see you then and have another chat.
Thank you very much. I appreciate chatting with you, and thank you for the opportunity. See you again soon.
Thank you.